Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Friday, May 25th, 2007, and the market's closed. We did get a little bit of a bounce today. The S&P 500 was up 70 cents, or about 0.46%. Gained about half of what it lost yesterday. So looks like that level that we were looking at yesterday at the 20-day moving average and the prior resistance level, as well as the Fibonacci area in this level right here, has found a little bit of support, at least for now. So let's take a look at that Fibonacci once again. What I did was I took the prior yearly high from February before that large sell-off and threw a Fibonacci up there, and you can see it came into the 0.382%, 38.2% retracement level. So we have an area that has significance for a couple of reasons. People who look at Fibonacci may have been buying based on this 38% retracement. Other people who were looking at this resistance level becoming support might have been purchasing, and other people might have been covering their shorts or purchasing near that rising 20-day moving average. The point is, a lot of times with technical analysis, it tends to become a self-fulfilling prophecy. Markets move because of supply and demand. If people are looking at this 38.2% retracement and saying, well, I'll stop selling because it should find support there, or if other people are saying, I'll stop selling because it's at the 20-day moving average, and then we have another group of people who are looking at that level and saying, hey, it's at the 20-day moving average. A lot of times that 20-day moving average acts as support. They go in and stick bids in. Support or demand slowly overwhelms supply in that area. It finds support, and then we get our bounce, and that's how the markets work based on the supply-demand mechanism. So right now we do get a bounce. It's much lighter volume, but a lot of that is probably because of the pre-holiday trade as well. When we look at a 10-minute time frame, there's no clarity here. You can see the market gapped higher this morning and then really was kind of range-bound. It wasn't very much of an exciting trading day at all, but it did make some recovery attempt in here. And right now we've got the short-term moving average did cross above the intermediate. So it looks like it is finding some support in here right now. I think today's low is going to be important, but even more important was yesterday's low, down near 150.75, let's call it. That'll be an important level next week. I still think we want to be a little bit cautious here. It looks like accumulation, but it could easily continue to break back down. So we really don't have a green light to go out on purchase, I don't think, yet. It's probably best for scalping mode. But when you look at that daily trend, there has been no damage to that trend at all this week. And we look at the weekly time frame, just a little bit of a pullback, no big deal at all. So looking now to the Nasdaq 100, the Qs, we found the 46th level tested yesterday, and that's going to continue to be an important level of support for this market going forward. I still think that it would be good for the market actually if it was to break down through there, test the 50-day moving average, then maybe turn back around. But it looks like the attempted breakout this past week, earlier in the week, did fail. So that just keeps us on our toes a little bit in here, and we've got to look at it now as back into that range. But again, a lot of times from failed moves come fast moves. So we just want to be alert. We do still give the benefit of the doubt to the buyers because we have a rising 50-day moving average. But the Qs finished up 29 cents today, up 0.63%. But again, this is the important level in here, 46. And I think closing below that level by more than 10 or 15 cents would really give reason for concern next week. But right now, it's too early to read anything really into it. We're seeing the same picture here where we have these moving averages crisscrossing and the market getting a little bit of support, but we've got this 5-day moving average kind of giving us no reason to be involved. So again, I still think the market overall is pretty neutral here. Semiconductors might be searching for a little bit of support. Last time, though, we still had that declining 5-day moving average that kept us from buying these, even though we thought the daily time frame looked good. So as long as that 5-day moving average is declining on the short-term time frame, we want to give the benefit of the doubt to the sellers, and we want to wait for what I call the alignment of trend, where we have an uptrend on the short-term time frame that matches the uptrend on the daily time frame. Now, these semiconductors could be broadcasting weakness for the rest of the market to come. A lot of times they do lead the market, and this is a good example of why you don't want to be early in your purchases right in here. This is very similar right about here to where the S&P and the Qs are, and really there's no reason, again, to get involved yet, unless you already are, of course, and then you just have to manage your positions. But from a trader's standpoint, there's no advantage to going in and purchasing at what you perceived as bargain levels, because a month from now, who knows what you're going to think of this market. And that could be because it's much higher or much lower. No one has a crystal ball, but we have to take it one day at a time and look at the action, where we have in here also on the IWM, the Russell 2000, we're finding a little support in here as well. This is a more mixed picture with the rising 5-day moving average back up to that level, or close to, approaching that level that had been the prior resistance that we had placed significance upon at 83. But in here we have this failed breakout, and again, from failed moves often come fast moves. So we have to be cautious on this group overall. A lot of times bigger sell-offs do occur from failed breakouts when we have a market that's extended. Not that the IWM is extended, but I was referring more to the S&P 500. So we've got a long weekend to kind of contemplate what's happening. I think that's what a lot of people are going to be doing. We had one position that's still open. I had updated that earlier this morning. That was in TASR. TASR we had entered on Monday, and I thought this stock might have been a jinx because it was mentioned on a couple other blogs, but in a lot of times that it happens that when I mention it and I see it a lot of other places, that it just becomes too obvious. But this was a purchase at 932. Again, we came close to getting stopped out over there, but it did rally nicely. I had put up an intraday bulletin this morning right about this level, to sell it above 940. Had plenty of opportunity to do that, and then to raise the stop on the balance to 1018. I think you want to leave your stop there. I'll be back at some point over this long weekend with another video with ideas for trading on Tuesday. Meanwhile, enjoy the long weekend, and talk to you then.